Yes. So now what we will do is we'll have to add one more sheet, which is called assumption sheet. In fact, just a second. I have to give you three models, in fact. This is with dummy, this is normal model, and this is with assumption. With the third model that I'm going to change is with assumptions, right? Because the thing that I'm going to change in this model will be changing this model a lot. So you should have the basic model without changes and the model with changes. So now I'll add an assumption sheet, which is a new sheet. This is the one. Copy this header again. Put it in assumption sheet and write it as assumptions, correct? Now what happens is, guys, during this whole model exercise, we you know did assume a lot of things. So we have to bring all the assumptions that we have taken in this sheet, correct? So assumptions are things which we have assumed it for the data between 25 to 29, right? So first hint of assumption is that the assumption will be between 25 to 29. And second is it will be a blue colored data. Like, for example, tax rate is my assumption that I'm assuming the tax rate to be 21%. So the thing is that the data I've assumed it between 25 to 29, and this is in blue. So I have to put this data in the assumption sheet. So what I'll do is I'll cut means Control X. Just and paste it. The moment I cut paste, the value will go away from here. And don't worry, the tax rate formula has been changed, because earlier the formula was like getting linked from here. But now it says that the tax is equal to G20, which is this, into assumption G6. So assumption G6 has the tax rate. Are you getting my point?
Yes, sir.
The same way, you need to just look at this model, scrolling slowly, and see if you have any assumptions which needs to be pasted from this sheet to assumption sheet. So when I look at this model completely, I did not find anything which needs to be pasted apart from tax rate. Only tax rate has to be pasted. Everything is black colored in this area. So there is nothing that needs to be pasted. Now come to equity schedule. Equity schedule, if you see, this needs to be pasted because this is a blue number and coming under 25. And we have assumed also $2 in this. So cut it and paste it here and write it as dividend, because this is a dividend section. Now, when you paste it, you see the formula has changed to assumption G9 to assumption G10, which is assumption G9 to G10. The formula, no need to make any changes in the formula. Now, third is can we paste this also, because this is a blue and between 25 to 29. So copy this time copy. Why? Because maybe you can cut it for a minute, because I'm saying cut and paste. Let's cut it and paste it and write it as equity, because this is a part of equity schedule. Now the problem is that this time the formula will not change, guys. See, the formula is just this. So whenever you have a formula which is in a range. When you select a range and when you cut in between, this formula will not change to and they will not be able to take the number from assumptions. So what you have to do is you have to bring this back like this. Formula change has been done. Drag it. So the formula changes to this, and you have to link you have to do 0 here. Sorry, you have to link 0 from assumptions like this. Now see that it is intact and the numbers are coming from assumptions. Are you getting my point? So whatever change I will make here, the equity section will change accordingly. And the formula will include that change. I hope it is clear to everyone.
Yes.
Kanak, Mr. Nallu, Somil, and Priyanshu, and Rochan.
Yes, sir.
Yes, sir.
Yes, sir.
Okay, then the debt portion will come. So in the debt, you see that. Can you tell me which all needs to be pasted from here in the assumption sheet? This portion?
Interest income also percentage.
Yes, yes, correct. So I'll just copy the blue numbers, paste it. But the problem is that we need to delete this and link from there. Like this. And keep it blank. So now 2750 is coming from the assumption sheet. Everything is black now. One more thing that needs to be pasted is this assumption sheet, which is we are assuming 0.5 as the interest income rate. So we will cut it. This time we'll cut it because it's not part of a range formula. And paste it maybe here and say interest income rate. This is the rate that we have assumed. So what I'll do is, now you see that assumption D20 is getting that interest rate that we take. And we can also do one more thing. Interest expense rate. So this is interest expense rate will this. Because interest expense you are claiming to be this. Even if it is black, not black, this is an assumption that we are assuming that interest rate will be 4.71. So this will come from here, but don't copy paste this. Keep it as black because it is getting derived from this category. If you want to make changes here, you can always punch some other interest rate. But right now we'll keep it as black. So equity is completed, debt is completed, everything is completed in debt. Then we can come to DNA. So in DNA, we need to paste the amortization because it's blue, cut and paste, and you can mention DNA schedule because this, you should know what is coming from where. We have all the headings. So amortization is coming. Anything else? You see the combination. Now again, we have assumption G25 from where is amortization is coming. And here also amortization is coming from G25. Next is acquisition of intangibles needs to be pasted there. So copy this time because it is a range formula. As I told you, range formula doesn't change. So for that, we can prefer copy paste. So copy this, paste it here, and then relink from the assumption sheet, which is 0. So we'll take it 0. Is that clear with everyone? Now everything is black. There is nothing blue. Next is working capital. In the working capital, there is nothing blue except the number of days. So you can definitely get the number of days cut. So number of days and working capital. WC is working capital. Then there's nothing that needs to be further pasted. And disclaimer. So this is what you need to do. Is this assumption point clear to everyone? How we are doing it? How to arrive at the assumption sheet and how to, which all to cut, paste and copy paste?
Yes, sir.
Yes, sir.
Now, one more thing, the story doesn't end here. There are still few things which are assumption and now they are in black, right? So I think equity and debt are fine. Only DNA and working capital needs to be rechecked because there are still some assumptions. Like, do you remember that your capital expenditure is based on the percentage of revenue and sales? So it means that 23% is an assumption that you are assuming that your capex will be 23% of sales. So what you can do, you can just cut the whole percentage of revenue assumption for capex and paste it here and write capex. Capex is a percentage of revenue.
But it's from that schedule only, no, sir.
This will be,
It is from that schedule, no, sir. So it's better to write on the, sorry, depreciation schedule.
depreciation. Yes, we can do that also. Good point. So what you can do is a part of DNA. So we can also put it here, no issues. If you want to keep it separate, you can keep it under capex also. So,
But
but
also,
I have to remember, I have to write something like this, capex as percentage of revenue, so that you know what is the percentage of revenue. Otherwise, percentage of revenue is not giving me a clarity that what is being calculated. Yes, you had a question?
yes, sir. So, but we also assume for all the sales, revenue, net income.
Yeah, we'll come to that
Does it?
point by point. Yes.
Okay.
P&E, this is also percentage of that we have assumed. Cut, paste. That is also your now. There is nothing that is left, which is your assumption here. Coming to working capital. Now we are doing a working capital as what? We are using DSO to forecast working capital. So these three things are also your assumption that we're assuming your customer will pay in 38 days and your DPO suppliers will need money in 73 days. So what you can do is cut it and under working capital, you can paste it. So next everything.
Sir, but the first 2 years of DSO, DIH, those are not assumptions.
Those are under assumption. We'll come to that also. By the time we complete everything, you will not have these questions at all. So we are doing step by step. So I'll just paste everything for now. Right. So DNA is completely done. There's nothing that we need to paste. If in case we would have used this, I could have pasted this also, but we are not keeping this in the model, as I told you. Working capital, there is nothing that we need to paste now. Debt, there's nothing that need to be pasted now. Equity, there is nothing that we need to paste now. These 4 schedules are clear to everyone? Do you
Yes,
think
sir.
that anything else needs to be pasted? No. In the operating model, still there are a few things which you can paste, but we generally don't paste. What are the things that you can paste is percentage of sales, because you are actually assuming 20% as a percentage of sales, then 29%, 10%, and 8%. These 4 things are still left. If you want, you definitely can paste. That's not an issue. But we generally, even if we don't, this is not something very important. If client says that, we will paste and we'll relink, right? Is that clear? And this
Yes,
also,
sir.
which is a growth, which is based revenues based on this 19%, that also we will not paste. These 4 or 5 things we will be doing in the next session, how to, handle these situations and things. I don't think anything else is left now in the whole 5 sheets. Everything is like assumptions are pasted. Now coming to assumption and making the assumption sheet more flexible, Because see, assumption sheet should always be blue numbers. There should not be any black numbers. Means everything is in input data because we are giving an assumption. So the point is, as one of the candidate, I think said that why we are keeping this historical, which is not assumptions,
Yes.
which is correct. So what you need to do is select all the three, copy, Alt TS, which is value paste. I mean, paste special, select the value, convert this formula into values. Say, okay, now everything is hard punch. So then next step is keep it in black. And then if you want, you can delete the historical numbers. We don't need historical numbers. Is that clear? If you want to keep it, you can keep it also. Why you can keep it is because maybe someone asks you that how did you arrive at 38? So you can say that this is the, and in fact, you can keep it as maybe, you can keep it as formula so that you can support, you can only copy paste this area and keep it blue. So that if someone asks you how is 28? So I can say that I calculated the history, which was 37 and 40. The average is 38. So if that is required, you can do that also. But I would prefer this to be deleted. That is better option. Or you can keep in the working capital the historical calculation here, and then you can paste only the futuristic estimates. So whatever you want to do, I'll keep it this way. Then I will do this copy, paste, delete the history, keeping the hard punch as blue. Everything is blue. Only thing this is black. I can keep this also as blue, but I would prefer keeping it as 4.7 because most of the bankers believe that they need to see how this 4.71 has been arrived. So they can just definitely go to here and see the derivation of this 4.71. If they want to change, they can change, not an issue. Rest of the things are completely blue and rest of the model is completely black, right? Everything is working like an engine now. Now, no matter what changes you make in assumption sheet, the model will always be intact and it will keep on matching. Suppose I get to know that in US government is going to increase the tax rate to 25% in 27, and it is going to be same throughout the next. So whatever changes you want to make, you can make. It will automatically change your profits. It will automatically change your balance sheet required things. It will always keep on change your cash flow. Everything will be true. Then everything for the future also will keep changing. So you can play with this model. This is just like a control sheet where you can, do whatever you want to. Generally, what happens is we give this complete till this stage, give it to the boss and the client, and they can make changes whatever they want. Suppose next year they say that, okay, maybe instead of 2, they can say the dividend can be 2.5 also. So you can change the equity schedule will accordingly change from 5,000 to 6,000 of dividend, and profits will also change. Everything will change. It's like an engine that you do something and things will follow. I'm keeping it to 2 only. If you want to raise equity, you can raise equity. If you want to raise debt or pay debt, if you want to increase your interest rate, suppose that 0.5 is not too much, you want to keep it 1%. So obviously the changes will automatically happen. Are you getting my point? What is how
Yes,
this
sir.
model will work?
Yes.
I'll
Yes,
write NA as percentage of PP&E also, so that you know that what is this PP&E all about. And this completes your assumption sheet. Now, why I've given you with assumption model also, without assumption model also, is because when you actually prepare now after the class, if you see the with assumption, you will not get things that I calculated for you, like those percentages and all, and you may struggle to complete this model. Means you don't have this, you don't have this. So I mean, you need a raw model without the assumption sheet to complete the model, and this is just an output sheet. You can do it later. So I think both the sheets will be helpful for you. Dummy is only for dummy numbers. So those 3 variants of model you should have with you all the time. Is that clear?
Yes, sir.
Now, one last thing is that we will go to this. We will bring the transcript. Have we discussed transcript till now? No. So under the quarterly earnings, you have transcript document. You need to download this transcript document. Everyone, please do that.
Yes, sir, done.
Okay. So this is my transcript. This is my transcript. This transcript is a very important document, guys, because this transcript, earning call transcript, means they, whenever the earning comes, every 3 quarters, the company announces the profits, that what is the 3 month profit and loss and everything. So whenever there is an earning announcement or an earning results that comes, they have a conference call with some of the best people in the industry, and the company is questioned by those people. So there is a conference call, like a Zoom call or a normal conference call. Whatever happens in the call gets transcribed and recorded as a text document. And in this call, the future are discussed. Future is discussed, that what will be your future revenue, what will be your future capex and all. And there is no guarantee that you will get any hints here, but you may get some hints. Like, so suppose, for example, I want to know that whatever I have forecasted here, is it matching with what management has as a target? Because we need to see that whatever I have forecasted should be matching with the management estimates. So that is there. So you can check different words, like one of the words you can check is outlook. Can you check outlook? Control F. So this outlook actually tells you turning now the business outlook. So outlook, you can just keep searching next and next. You see that you have a financial outlook also on page number 7. Please read this. We expect first quarter 25 revenue will be 39 to 41. Means first quarter, which we are still running, which is a March. So March ending revenue is expected to be 39 to 41. So can someone tell me, if one quarter revenue is approximately 40 billion, what will be the revenue for the full year?
Into 4.
160.
160. So 160 is roughly, because this is first quarter, and there might be a seasonality in the business, that first quarter is 40, but next quarter can be 50 also. But minimum 40 we can think of. So 160 is the minimum revenue. We have revenue as 195, which is like 35 billion extra, which is thoda sa, we have done a little higher revenue. So that we can check that are we close to what management has to say. But right now we are not that close, and that is okay. Don't need to worry about it. We'll do it. We'll find out some solution to it. Next, expense outlook. Do you see expense outlook here? The total expenses, that expectation in 25 is going to be 114 to 119 billion, right? So let's say how much total expenses that we have. So for that, we need to sum this plus this plus this plus this. These are the 4 major expenses, total expenses, which is coming out to be 129. And here it is 119, which is still very close, not a big deal. So we can definitely say that we are very close to what management has to say, right? Third is, anything else they are providing? Capex outlook here also providing capital expenditure. So they say that their expenditure will be in the range of 60 to 65 billion. Can you see this 65 billion?
Yes.
On page number 7? Here, go to assumptions. Sorry, go to DNA. Your capex turns out to be 45. And here it says 60 to 65. So here we can make a change. We will change everything possible. I'm not denying that, but this is very easy to change. How? Go to assumptions. Instead of having a capex as 23, can we say capex as say 25 and check if we are reaching to 60 to 65? So when I say do this, my capex becomes 48. So now I'll try to do minus 30%. This is minus 30%. Then my DNA turns out to be 58. It is still lower than what they're expecting. So then I will do instead of 30 minus say 35 or something. Then my DNA is going to be 68. It is higher. So I can change it to minus 32 or something. So you have to do this trial and error and reach to 62.5, which is the midpoint of 60 to 65. Clear enough?
Yes, sir.
Now what is happening is that if this is 632, can we keep everything as 32? All the numbers will be 32 as a, I mean, first year is like similar. So your DNA, your capex will increase throughout. Your expenses have increased in the business. Your cash flow has shrink down a bit. Keep changing, keep matching with the management. See, guys, there is no one who can forecast the numbers better than management, because management is deciding what to do and what not. So you have to follow this transcript. Now I am saying that there is no guarantee that you will get these numbers. If you don't get, don't worry. Whatever you have done is fine. But if you get those hints, try to incorporate in your model. Now, why I'm not incorporating this in my revenue right now? That you must have told that why we are not doing 170 and why we are not doing 119, because this is a part of this, and this we are going to cover in the next session. So I don't want to change revenue and the related expenses, which we'll be doing it later on. But whatever else we can do, we can definitely do. Anything else that you see as outlook? I don't think there is anything else. You can keep searching on the outlook keyword. You have multiple keywords like anticipate. Instead of outlook, you can say anticipate. So capex have directly anticipate. With anticipate, you can also search. Then expect. Expect also is a very good word to search. This line is also, guys, very important. See, do you see this line? Can you read it and tell me what is happening here? We expect.
The capital expense, basically the capex has like 60 billion to 65 billion of
Yeah, so
expected.
they expect a high capex growth, or capex growth will be driven by increased investment in support generative AI efforts. And so you know that AI is like the next thing, and Meta is investing a lot on AI. And if they're investing a lot of AI, they need a capex. So capex will continue to grow. That is the key conclusion that you probably can make, that capex is not going to decrease anytime soon. So it is going to be higher, and we have done 32, which is fine. Any other keyword that you can think of? Forecast. Anything else any other keyword that you want me to search to get a futuristic outlook?
Dividend, because we
Dividend. We paid dividend of this, the share ending the year with this. So if this is doing the past, right? We can go to next. We expect strong financial position will enable us to support this investment while continue to return capital through repurchase and dividend. So they expect the dividend and repurchase will happen. And what we have done is 1 year of forecasting for dividend, which I think will definitely happen, right? But they're not giving any number. And trust me, sometimes you don't get any number. They're just unnecessary beat around the bush, and they give this is good, this is bad. Now you cannot quantify them, right? Anything else that you want to search? Maybe equity raise, because we have zero equity raise. So equity will definitely is not getting discussed. Any kind of debt related information. So debt, no information on debt. Anything that you want, you can check, right? So do you think that transcript plays an important role in fine tuning your model to the management as per the management requirement?
Yes,
So
sir.
that's the reason why don't underestimate this transcript document. In fact, many analysts believe that if you want to understand any company's business and you want to research on any companies in the business in this world, you need to at least read the transcript for at least 3 to 4 quarters, 1 quarter, second, third, fourth. Try to read, try to spend time. You will get a futuristic outlook of any company. Any company. If I want to follow Reliance Industries, if I want to follow Tata Motors, if I want to follow Adani, I would prefer to read transcript to understand the future plans. Right? So that's the reason why transcript is an important document. Any question till this stage?
No, sir.
Right. So we can probably, if there are no question, and do you think that you'll be able to do all of this? So please complete all these stuff, whatever I've completed, and make sure in your model also, you should have 3 different model that you have to create. One is with assumption, one is with dummy, one is plain model. Because when you actually, after a few months, you will need both the models. One is with assumption, one is without assumption. Because without assumption, if you see this model, so you know that how you calculated these DNA percentages. Because when you see without assumptions, with assumptions, you will not have these percentages here. So you may get confused and frustrated that where this all that percentages have gone. So you have to have both the models where you can actually try to understand both the aspects. Why I've done assumption is one more reason is because management and client don't like assumptions are thrown in different sheets. They want all the assumption in a single sheet. Consider this like a switchboard in a house where you have control of everything like room temperature, fan, AC, light. So this is just like a control. You have to have a control of the model in a single sheet rather than, splitting in across the model different sheets.
So we
Right?
can do the same model with any other companies by our own.
Yes, definitely. So if you want, so you have to complete this model for sure. But if you want to keep, do this same process of any company, you can pick any company of your choice. If you take my suggestion so that you should be able to do it faster and with minimal hassles, try to take a US company to start with, and then slowly, gradually you can do Indian companies. In Indian companies, you may feel the disclosure issues that the disclose information very less sometimes. Second is the reporting structure is not very clean. So I would prefer a US company. Second is don't work on as of now, oil and gas and banking companies will be, I can give you some models for those companies later on because these two industries are a little different, but you can take, say you can work on retail industry like Walmart. Walmart is a giant in retail in US. So you can work on Walmart, you can work on, say, Tesla as a company. You can work on Apple, Google, any company that you want. Follow the procedures, and 90% of the things you'll be able to do. There might be some errors or issues. You can reach out to me for that. But if you follow the procedure, you'll be able to match that also. Is that clear?
Yes, sir.
Yes,
And
sir.
another one question, sir. Like I am signed in for like investment banking course.
Right.
So how many months might it take?
So I think the month is March, April. So I think probably by April end your course will be over.
Okay, sir, and this will help me. Like, do I need to do all this in my investment banking job, or I will be getting this information and I will be like doing things?
So whatever we are doing, a lot of things are already, you'll find that you will be doing day-to-day in investment banking roles that you may get when you get it. So basically we use, I'm also part of investment banking, side only. I worked for 10, 15 years, approximately
Okay, sir.
15 years. So I have done a lot of this like financial model and profile creation and ratio analysis. So everything which is there in IB, equity research, credit research, FP&A, financial analysis roles. I'm going to teach you all of them so that you are well prepared to take up any jobs in finance, especially in analytical space. Not accounting, not auditing, because we don't do auditing accounting. Okay.
Yes, sir. Okay, thank you.
So, okay, guys, have a nice day. And I'll share this sheet with all of you. Please complete
Yes, sir.
it stage.